Perfect. Dr. Richard Gerhardt, thanks again. Really appreciate your time.
Thanks for having me.
Yeah. All right, next on ARC Bakersfield, Amazon gets a false alarm of an active shooter. Our Eyewitness News reporter Steve Virgin joins us to talk about how people can prepare for these types of threats. Mortgage rates are finally starting to drop, and many financial experts say that this is good news for the housing market. The American dream of owning a home has remained just a dream for many potential buyers as the reality, of high prices and high interest rates has shut them out. Now, joining us now to talk more about this here locally, Allyn Mederios from Agape Mortgage to come in. And Allyn, thanks for taking your time out this morning. Let me just get right to it. Is now a good time to start looking to buy a home in Bakersfield?
I think it is for a couple of reasons. Number one, interest rates have come down pretty significantly. They were as high as 8% last year, and now they're hovering in the low sixes to high fives, depending on the loan type that you have. And the reason why it's a good time is because inventory is starting to build, meaning there's more homes in the market, which means that sellers may be in a position to help you with closing costs and potentially better terms for you to be able to get into a house.
So this is one of the things we hear on the news a lot, we've talked about, is that this current generation growing up, the younger generation, it's harder for them to buy a home. It's too expensive for them compared to what their parents had. Is that true, or is it just back in the day, this is just my thought process, that homes were probably at the same price, they were just smaller. Today's homes are a lot bigger. There's a difference. What's your thoughts?
Well, the reality is it's all around more expensive. So purchasing a property in today's market is significantly different just because of inflation. So take yourself back before 2020 and you can look at the costs of any goods or services. I don't care if it's bread, eggs, fuel. These types of things all affect the day to day. Even though increases in wages have increased, it doesn't mean the affordability has improved. Now, with that said, typically it's going to be a 2-income household that's going to qualify. So for the average family, the earnings need to be about $85,000 or greater with very minimal debt in order to qualify for the median home sales price in Kern County, which is currently sitting at somewhere in the range of around $380 to $390, and it depends on what your needs are.
So it depends when you're applying then for that mortgage loan to have like a cosign, like the two individuals maybe that are living there together can co-sign, or is it just one person's but the double income in the household?
Well, it just depends. It's total household income. So we're looking at actual what we call debt to income ratios. It's just a measurement of how much debt is going out monthly versus your total income coming in. The reality is that you're going to pay rent someplace. So the amount that you pay in rent, it's probably going to be a percentage of your income. And if you exceed maybe 30 to 40% of your total household income, that's really going to be very similar numbers that a mortgage lender is going to take into consideration. If you have just very conservative attitude towards debt and you save and you pay off all of your debt monthly, meaning you don't carry a credit card balance or anything like that, it could be a benefit. It means you may qualify for more house, and it also means you can probably live more frugally and then build equity over time. And that's really where the wealth begins in home ownership, and really getting your foot in the door is really the key component. And a lot of people wait to try to purchase because they want to save up for a large down payment, but they realize that the appreciation and cost of housing has actually gone up. So they've missed the boat in a sense. So I would say if you can get yourself into a home, it's better to do it sooner than later.
So it's better than, so some people renting right now, they're like, well, I'm just trying to wait till I can get more money to pay that. You may be losing right now if you're renting rather than owning.
Absolutely. So the general rule of thumb is that you're going to be putting down first month, last month, sometimes pet deposit when you are purchasing. And then they're going to charge you for a credit report or some other type of application fee on most residential leases when you're trying to find a place to rent. Well, those costs for that credit report and other things and the savings that you're going to have to put up as far as the first month and last month, if you use a down payment assistance program, that may be all the money that you need. So it just depends on the structure of the financing.
Are there grants and stuff for people like that? Is that easy to find? How does that work?
So grants are specific to the county and sometimes city, and not all lenders offer these programs. At this time, there is one grant program that's available, and it would be specific to the bank. So the short answer is they're available. Not every lender offers them, and it would be specific to your case. So I would say apply and see what is available.
And one more final question, refinancing. Like you
Sure.
were looking at mortgages, but maybe someone's interest rate was a lot higher because they bought like a year and a half ago, 2 years ago. When can you start refinancing your home? What are you looking for to do that?
So the first thing you should consider is if you can save at least 0.75% or 0.75% or 1% lower than your current rate, it makes sense to look at refinancing for a couple of reasons. Number one, the total interest paid will be less, but secondarily, you should see the monthly savings. Now, if you've purchased a house in the last, say, 2 to 2.5 years, your interest rate is probably hovering in the high sixes, potentially low sevens to mid sevens. And if you can get yourself into the low sixes, and if you're in an FHA loan or a VA loan, right now they're in the fives. It's a wonderful opportunity to potentially consider refinancing. Now, you should do an analysis. I think you're going to be inundated with all kinds of solicitations. You really need to do this with your eyes wide open because there are costs associated with these refinance, and they're typically run into the loan amount. So your balance may increase in order to do this. But what I always tell people is that nothing's broken. You're trying to make it better. So take a look at it. See if it makes sense financially. It's always a good idea to have someone local to help you out for reasons that they're going to be able to give you more of a realistic outlook on what's going to happen, and look at your finances and see if this is a betterment for you and your family.
Love it. Allyn Mederios with the Agape Mortgage. Man, really appreciate your time. And if people are watching and they have any questions, how can they reach out to you?
So you can call my cell at 661-496-9311 or just go to mynexthomeloan.com.
Perfect. Allyn, thank you for your time.
Absolutely. Thank you, guys. Have a great day.
Yep.